Can Howard Schultz come in and save the day over at Starbucks again? We'll talk about that and more on today's show. What is going on, investors? Hopefully, you guys are doing well out there. Time to check in on Starbucks. SBUX is the ticker symbol, because over the last year, stock's down big, down 35% year to date. The stock's down 36%. Now, during the regular trade, stock was up about 1.4%. In the after hours, after reporting earnings, up about 5%. We'll come over here and we'll look at this from a technical perspective as well. I mean, this thing's just been falling off. Is there an area of support? Is there an area to buy Starbucks? Now, I'm going to tell you the lens that I'm going to view Starbucks. Starbucks is a top 10 holding for me, but why do I buy and hold Starbucks? It is because of dividend growth. Now, Starbucks back in September increased their dividend by 9%. The year before that, 10%. They increased it by 13.9% the year before. You just keep reinvesting those quarterly dividends, and that dividend growth is why I buy Starbucks. So when I analyze Starbucks, am I worried a lot about the revenue growth, the profits? Yes, but only from the dividend perspective, which sitting at $1.96 per share. That at the current time, this is a really high yield in my opinion for Starbucks. Okay, it's not a high yield in general, but 2.6%. Obviously, when your stock makes a move like Starbucks has from over $116 per share down to about $78 per share, that yield is going to continue to move up. But what's interesting also that is happening over at Starbucks is you have Howard Schultz stepping in again and again and again with this company. As we'll see, this company is at a turning point, especially from their valuation perspective. Now, those earnings in the most recent quarter, they came in at $7.6 billion. 15% year-over-year growth. And some of you are going to say, 15%? That's fantastic. Okay, yes, it is. But again, remember, this company had some shutdowns. It's had some difficulties like a lot of restaurants or any kind of service restaurant with the virus situation. Now, company, in my opinion, is still in recovery mode. That's why you had Howard Schultz essentially arise from the dead again and come back and try to save this company. Wall Street was expecting about where Starbucks came in. They were actually anticipating that 15% revenue growth. They're expecting another 12% in the upcoming quarter and then slide down to kind of like high single digit, maybe even 10% revenue growth for the upcoming basically 2 years. And then from a profit perspective, that is where you're going to see the growth again with Starbucks. So that's the playbook for Starbucks, is they're going to have kind of high single digit revenue growth, but they're going to couple that with somehow making more money, going back to maybe even 20% revenue growth. Because when we come over here and look at the financials, we'll see that, yeah, our dividend is still safe. But again, there was a reason why we grew at 9% and then it went 10% the year before and then 14% the year prior. If Starbucks can reaccelerate those earnings, well, that certainly will be beneficial to that dividend payment. Now, from a valuation perspective, I thought this was really interesting. We've got a price to sales. I maxed this chart out. Starbucks has been a public company for a long time. And we see, yeah, during the Great Recession, you fell way under 3 times sales, which is about where Starbucks is trading right now. But this stock bounced off about 3 times sales back in 2018, bounced off there in the lows, the March lows. I mean, a stock like this was absolutely obliterated because all their locations were basically closed. And now here we are again at 3 times sales. We were even at 3 times sales back in 2006, 2005, 2004. I mean, this 3 times sales mark is an area outside of essentially a depression where Starbucks stock has essentially bounced time and time again. We'll see if they're able to do that again. We'll look at that from a technical perspective, but I do want to look at these earnings. They came in at this $7.6 billion. Last year, you're at 6.7, call it. That was 14.5% year over year growth. Now, what also is growing over at Starbucks is the operating expenses, and this might be why you're bringing in the captain, Howard Schultz, is because look at this. We grew our revenues 14.5%, but our costs grew 17%, so we're not able, obviously, Starbucks is already kind of a premium price product. When you think about a cup of coffee, there's 20 cents of ingredients, but obviously Starbucks got to charge way more than that. You see cost over the last period went up from 5.7 up to the 6.7. So yeah, you're going to guess it. Your operating income, despite the increase on the revenue side, our operating income actually went down by about 4% from 987 down to 950. When your operating income goes down, well, chances are your net income is going to go down as well. In this case, it didn't. They had to pay a little bit less income taxes, but essentially flat year over year. You went from 660, well, a little better than flat, okay? 660 up to about 674 on that net income side. The reason why we come all the way down to net income on Starbucks, because a lot of companies, we just stop right here on operating income and we say, hey, look, interest rates change, income taxes change depending on who's in office and what they decide to do. Well, we stop there at operating income. No, but when we factor in a dividend, we want to come all the way down to the earnings per share. We see cash dividends paid in the quarter was at 49 cents. Our earning was 58 cents. Last year, we earned 56 cents. So just that marginal increase on that net earnings, and we're just 9 cents over what we pay in a cash dividend. This is why there's the positive. Okay, when you own Starbucks, you own a share of Starbucks, you're getting 49 cents out of 58 cents of profit. This company is, and then that doesn't count the buyback. We'll look at cash flows here in a second. This company also bought back shares in the most recent quarter. This is a tremendously shareholder-friendly company. And if Howard Schultz can come in on his horse and clean ship and maybe clean up the cost structure and get sales and profits moving back in a sharp upward direction, well, there's your positive momentum with Starbucks. That's what you're betting on. That's what you're hoping for if you're going to buy shares in this company, because this dividend, yes, it's going to continue to grow, but we're not going to see that like 8-9%. And with where inflation's at right now, that actually is a big deal with Starbucks. Now, moving on to the balance sheet. Balance sheet looks pretty good. Okay, some cash really left the building. You had $6.5 billion in cash. Now you're down to $4 billion. So your big thought should be, look, this company actually had positive earnings from a net income side and operating income side. But look at cash from October of last year to April of this year. It bled out of the company pretty fast. So you should be wondering, well, where did that cash go? We'll find that out when we get down to cash flow. You see long-term debt also ticked up in the most recent quarter from 13.6 up to 14. This is not the cleanest balance sheet you're going to look at. This is certainly not a tech-like balance sheet. And the really bear case argument is, man, if things really fall off a cliff for Starbucks, this balance sheet would need to get levered up. They've already got $14 billion worth of debt on versus just $7.5 billion in total current assets. Well, there you go. That's not that great. Now, from a cash flow perspective, year over year, very similar net income number. We talked about this. This is actually going to be for a 6-month period. What I just showed you above on the statement of operations was for a quarter basis. So they combined 2 quarters here. So we go from 1.3 last year up to about 1.5, get to add back some things, subtract some things. We get to net cash provided by our operating activities. And we see that cash flows, again, despite an increase on net earnings, despite an increase on net revenues, you're seeing your net cash flows over at Starbucks actually go down. They went from 2.8 down to about 2. So just not driving the profits off those additional revenues and net earnings over at Starbucks. Certainly someone like Howard Schultz has experience kind of cleaning this up. From a financing perspective, we talked about how they burned through a lot of cash, okay? About $2.5 billion over the last 6 months or so. Well, a lot of it, the vast majority of it actually went to a share buyback. So repurchase of common stock over $4 billion. They paid $1.1 billion worth of cash dividends. Remember, when Starbucks buys back this about $4 billion worth of shares, they're actually retiring the dividend that they have to pay on that. So despite the increase on the dividend, it's not always met dollar for dollar down here because they bought back so many shares. That's another advantage of a buyback when you have a relatively high yield or a decently yielding stock, is now Starbucks is not required to pay $1.96 in earnings on that 4 billion in shares. Now they had to pay for the 4 billion shares, but they get to retire those and not have to pay the cash dividends on those. Incredibly shareholder-friendly company. And I tell you what, your upside is if they can turn things around and keep that dividend growing. This is an absolutely fantastic company. and a fantastic price. You haven't seen these prices really since 2020 on this stock, and that's obviously following the heels of this stock going down south of $50 per share. But in the shorter term, shorter and intermediate term, this is an absolute falling knife. I mean, it doesn't get much steeper than this. I mean, this looks like Netflix. This looks like Facebook. This looks like a complete disaster. And in the shorter term, it is. You have some overhead resistance. So as the stock was down here at about $74 per share today. It's moving up in the after hours up here to 78, but that's still, I mean, you're still basically in this downward channel. You're still in a longer term downtrend. You have some overhead resistance here at about $84 per share, I would expect. And again, that's plus or minus $5. So you're probably in that 80 to 90 range. There should be some overhead resistance on this one. Otherwise, you have to assume that Starbucks stock is just going to continue to go down. Some of you, like me, might be already in this stock, or you're looking to maybe dollar cost average into it. I think, look, the technical chart is completely ugly, but some of the fundamental stuff you can maybe pull from is, again, about 3 times sales, which is where the stock is right now, is where you've seen reversals in price in previous years. And then finally, you've got the captain, you got Howard Schultz back in the CEO seat. Who knows how long he'll stay on this time, but his track record is obviously absolutely stellar over at this company. And I would expect Starbucks to turn the corner, not necessarily getting those gigantic dividend growth raises, but that is your upside. If this company can really successfully turn around, well, the valuation looks relatively reasonable over at Starbucks, and you certainly have upside in the shares. When they stop this bottoming formation is anyone's guess. I certainly, if I were to add to my Starbucks position, it would be little by little, because this chart is still looking ugly from a technical perspective. But all things being considered, Starbucks well positioned for a comeback. It'll be an interesting story, and certainly interesting from an investment perspective as well. Hopefully you guys enjoyed today's video. Be back again soon with more. Good luck with your investments.